For decades, Americans believed keeping money in the bank was the safest financial decision possible. But in 2026, millions of people are discovering a shocking truth. Their saving accounts are barely paying them anything. While inflation keeps rising, traditional banks continue offering interest rates so low that many savers are actually losing money every single year. At the exact same time, a growing number of online banks are now offering over 4% APY through something called high yield saving accounts. And suddenly, Americans are starting to ask an uncomfortable question. Has my bank been quickly making me poorer this entire time? Tonight, we are breaking down the rise of high yield saving accounts, why traditional banks are falling behind the best accounts in 2026, and the financial psychology separating smart savers from everyone else. Saving money used to feel simple: work hard, deposit your paycheck, keep cash in the bank, earn interest. But today's economy has completely changed that system. Inflation has transformed how many bucks. Every year, grocery get more expensive, rent increases, healthcare costs rise, insurance premium climb higher, and while Americans struggle with the rising costs, many traditional saving accounts still offer less than 1% interest. That means millions of people are unknowingly losing purchasing power every single year. Here's the scary part. Most people never even check their saving account's interest rate. They trust the bank automatically, and banks know that. That is where high yield saving accounts, also known as HYSAs, enter the picture. Unlike traditional banks, many online banks have lower operating costs, no expensive benchmarks network, fewer employees, more digital automation. Because of this, they can often offer to pay customers dramatically higher interest rate instead of 0.2%, 0.5%, or 1%. Some HYSAs in 2026 are now paying 3%, 3.5%, even over 4% APY. And for savers holding long cash balances, that difference becomes enormous over time. APY stands for annual percentage yield, which percentage how much interest your money earn over a year. Now here's where things get interesting. Imagine two Americans is saving $25,000. One keeps the money in traditional account earning 0.3%. The other chooses a 4% high yield saving accounts. Let's compare the differences. Traditional account 25,000 into 0.003 equals 75. Only around $75 earned in a 1 year. Now compare that to 4% APY. That's around $1,000 annually. Some many different banks, and this is the exactly why financial experts are encouraging Americans to rethink where they store cash. Several banks are currently dominating the HYSS market, and each one targets different types of saver. SoFi, high yield savings. SoFi has become one of the most talked about online banks in America. Why? Because it combines checking, saving, mobile banking, investing tools into a ecosystem. SoFi currently offer up to 4% APY under certain conditions. It also includes no monthly fees, no minimum deposit, cash bounces for direct deposit users. This makes it especially attractive for younger Americans looking for an all-in-one financial platform. CIT Bank Platinum Saving. CIT Bank is currently grabbing attention with one of the highest APYs available, up to 4.10%. But there's a catch. Customers typically need a qualifying balance and promotional enrollment to unlock the highest rate. The highlighting something important. Not every advertised APY is automatically guaranteed. Smart savers always read the fine print. Marcus by Goldman Snatch. Marcus has built a reputation around simplicity. No monthly fees, no minimum deposit, strong interest rate. For many Americans, the Goldman Sachs brand itself creates a sense of trust and stability. And psychologically, that matters because in uncertain economies, people often prioritize security just as much as return. Ally Bank. Ally remains one of the most consumer friendly saving platforms. Its biggest strength isn't necessarily having the highest APY. Instead, it focuses on automation, saving tools, budgeting supports, user experience. This appeals heavily to younger savers trying to build better financial habits. American Express High Yield Saving. American Express target conservative savers. The account offers competitive APY, no fee, strong brand reputation. But unlike some competitors, it does not include ATM cards or debit access, which means this account works best for long-term savers, not people consistently moving money around. Most people think banking is only about numbers, but banking is actually psychological. Traditional banks depend on inertia. People stay because changing banks feels annoying. Researching accounts feel complicated. Financial product feel confusing. So millions simply leave money sitting untouched for years. Meanwhile, financial educated people consistently optimize their money. They compare APYs, fees, accessibilities, mobile tools, FDIC's insurance, customer service. Because wealthy people understand something powerful. Small financial advantage compound over time. High yield saving accounts are not perfect. And this where many YouTube videos become misleading. Some promotional APYs are temporarily. Some accounts require direct deposit, minimum balance, special membership. Rate can also change quickly depending on Federal Reserve policy and market condition. And unlike stock investing, HYSs won't create explosive wealth. They are primarily designed for emergency fund, short-term saving, protecting cash from inflation, not becoming rich overnight. That distinction matters. The real story here isn't just about high yield saving accounts, it's about awareness. For years, millions of Americans accepted whatever interest rate their bank offered without asking questions. But in 2026, people are becoming financially smarter. They are realizing where money sits matters because in a high inflation world, doing nothing with your saving many quietly costs you thousands over time. And perhaps the biggest financial lesson of all is this: the wealthy don't just work for me, they make sure their money works for them too. Which bank would you trust with your saving in 2026? Comment below and subscribe for more deep financial insights and money strategies.